Well, good morning and very warm welcome to month 3 of the 36-month Forex Trading Challenge. Back here at my desk at home and up early this morning doing the market analysis. Over the weekend, spent a lot of time doing market stuff, looking at with it being month end, looking at the monthly position in terms of the simple moving averages. Looking at the monthly closes to see if it gives me clues as to what might happen this month. Doing my weekly relative strength, daily relative strength, analysing the news out this week and putting that in my diary so I can be cognizant of it and protect myself ahead of it. And one or two other things. Yeah, the other thing actually, which is always the laborious task at the start of any month, is to replot what I call my SIG level 1 levels. These are basically the 10, 5 and 3 year highs and lows which I get from barchart.com. I check them to my trade platform in Trade Navigator and I plot these on the chart. They're usually, well, they give me a clue as to where we might be an extreme of price, where we may get a reversal, and they factor into a number of my trade strategies. So it's important that I have those plotted and have those plotted currently. Last couple of months I hadn't updated those from, I think it was June. Wasn't too much of an issue because price hadn't moved that far, but it's good to have those latest levels plotted on the charts now. So these are the black lines you see on my charts. Had a really good finish to the month. My eToro account finished just shy of 10% profit. Now that calculates my monthly performance not just on closed trades but also on open positions. I do things slightly differently with my own private broker accounts. I have set my new risk parameters for this month, and Friday was really good. I was traveling back from the Isle of Wight and pretty much all of my positions bar one were moving strongly in my favor. Bit of a reversal towards the end of the day, with it being the end of the month, people taking profit. Today is slightly different. It's a holiday in the US. I was expecting quite a quiet start to the day. There has been some offers in the pound, which has impacted some of my positions. I'll talk about that in a moment when we get into the charts. But you know, start of a new month, there's however many days, at least 4 weeks of trading activity. Any trades that I have are just one trade in a multitude of many trades that I'll take. The important thing, as always, I'll probably sound like a broken record, is to stick to the strategies, stick to the plan, and maintain the discipline, which is exactly what I'm doing. So first day for the boys at their new school. How are you feeling, Sam?
A little nervous.
You seem a little nervous. They'll be absolutely fine. So day 47, back at the ranch. Kids had their first day at school, just been to pick them up. Went back to jiu-jitsu today, been off for more or less a month, had one session I think in August, but been pretty much off for a month. So I'm feeling a little bit red, a bit bruised, but good to be back in the game. Also reliving memories of our trip to Barcelona. I have my Barca top on, which I bought there, so yeah, fond memories of that. But it's back to business in the trading game. Yeah, over the last 24 hours, a couple of positions have been exited. These were, you know, signals went to tell me to get out, to cut my losses short, which I did. Both of those trades, which was euro pound and pound Swiss franc, both of those trades ultimately hit what was my initial stop. I got out early, so I cut my losses short, which is what the game is all about. In terms of my other trades, my New Zealand dollar US dollar short, I have 3 positions in there, so technically I have 6% invested of my capital, but only 2% risk because the first 2 positions are in profit. Yeah, this is a big trade, and if we get below the 3-year low, continue to the 5-year low, then you know, this trade could be very, very profitable indeed. Just had a bit of heat on that at 3 o'clock this afternoon. US dollar news out on manufacturing. basically has worse than expected manufacturing news in the US, which has sent a spike in New Zealand dollar US dollar, but the levels are holding. On New Zealand dollar US dollar short, the 30 exponential moving average seems to be holding up, and on the New Zealand dollar CAD short that I have, the 50 simple moving average seems to be holding up, and the pressure in both of those pairs is very much to the downside. That's the long-term time frames look to be to the short side, so it's going to take quite a bit to turn that market around, and probably a little bit more than one news story out this afternoon. So it could be that these spikes give sellers new reason to get short, and that new selling pressure, if it does come to bear on the market, could push between those important lows. So I'm just watching and waiting. Talk about fear today in the daily blog post, which you can read at stgforex.tv. I talk about the fear that is within us all. It's a primitive instinct that we have, but in the marketplace, it's not particularly helpful. So you have to check it, you have to temper it, and having rules in place to know what to do and when to do it or not to do stuff, as the case may be, is important. The fact that New Zealand dollar US dollar has spiked, it's eroded some of my paper profits in that trade. The temptation might be to get out, but the signals haven't turned up to tell me that I'm wrong on this trade, that things have changed. If those signals do turn up, as they did in the other two pairs I mentioned a moment ago, then of course I'll get out. But for the moment, I'm holding, waiting, patient, and trying to stay relaxed. Good morning. It's Wednesday morning, around about 8:30, day 48 of the challenge, and goodness me, the last 24 hours has been pretty frustrating. Stopped out on a trailing stop of my Swiss franc Japanese yen short. That was for a profitable trade. Also stopped out of my New Zealand dollar CAD short. That was pretty much break even. My New Zealand dollar US dollar short, which is where I'm highly leveraged, it's tracking up off the 3-year low, and at the moment it's flirting with a 50 simple moving average on the 240 chart. So at the moment we're kind of holding underneath the 2 a.m. and the 6 a.m. candle close, closed below. We're currently, as I leave the house, I'm sat in the car, as you can see, as I leave the house, the price is testing that, but who knows. The news on Bloomberg this morning is that risk assets are bid, primarily because of a kind of easing of tensions in Hong Kong, who knows if that's the reason. But New Zealand dollar causing me a little bit of stress. If that trade is stopped out on a trailing stop, it's still a winning trade, but it's the paper profits that I will give back that is kind of frustrating. But as always, I've got to follow the rules. I have entered new positions this morning on Euro Australian dollar short and Australian dollar Japanese yen long. Both of those presented signals for me, both trend signals. So I've took those trades. We'll see how they play out. It's a game of multiple trades, not one individual trade, although it would be nice if that New Zealand dollar US dollar short really paid off in a big way. But so this month got off to an okay start, not closed out the last month yet. This morning I am off to the gym, meeting a friend for a coffee. I like to get out of the house. I've been in front of the charts a lot this week. I'm going to meet a friend for a coffee, talk about business, talk about stuff that, well, we probably will talk about trading, but not too much. And then I'll be at the gym, meeting at the gym, so do some weights, and then I'm off to jiu-jitsu. What that means is that I'm going to miss the 10 a.m. close. I'm going to miss the 2 p.m. close, but that perhaps is no bad thing. Sitting in front of the charts, watching stuff happen all the time is not good for your mental health. Although I should be looking at the charts at 10 o'clock and 2 o'clock, sometimes it's not possible. In fact, what am I talking about? I'll be back for the 2 o'clock close. So I'm just going to miss the 10 a.m. close. That could see a signal for me to lighten up slightly on my New Zealand dollar US dollar short. But I won't know that until 2 o'clock. So going to enjoy the morning. Going to go and do some exercise. Always makes you feel better. And I'll check in later and see how things have panned out. So it's 8:20 on Wednesday evening, and the 6 p.m. close came and went, and kept me very busy. 3 signals showed up: US dollar, Swiss franc, US dollar CAD, and New Zealand dollar, Japanese yen. So I've entered 3 positions. Lots been happening today. My New Zealand dollar, US dollar short was stopped out, unfortunately. So it's kind of changing of the guard. The old trades have stopped out, have completed now, and it's into new trades. I've got 6 new trades. Caused me a bit of difficulty in terms of my risk exposure. I've exceeded my maximum risk exposure for the moment, which is not ideal. I need to review that as these trades play out overnight. But for the moment, in 6 trades, and we'll see how they progress. Follow the signals, follow the discipline, follow the rules. That's what it's all about. Yeah, closed out the month with these trades closing out. It means the results are in for last month, which was August, of course, if I can remember. And it was a down month. So, it was a losing month. Winning month in terms of following the rules, but losing month in terms of the profit. But what's very interesting, and I will record a more detailed video on this and also detail it in the blog post, that the statistics, the numbers that I measure to kind of track my progress and track my trading performance were actually quite similar. Yeah, I'll talk about that when I get into the blog post, and also I'll record a video with those numbers on screen and talk you through those. But it was quite interesting. So I've got an early start tomorrow. I'm off to London for the day, actually overnight. So it's trading on the move again, but it makes for some interesting content, some interesting background. So watch this space. But for the moment, I'm going to get to bed early, have a good sleep, and see how these trades play out. Be up early tomorrow morning to see what's gone on. Well, good morning. It is just after 5:30 on, let's get that straight, on Wednesday, no, in fact, goodness me, Thursday morning. I'm behind a day, and I'm up bright and early. I'm off to London today. I am chairing a meeting for ICAW, Business Committee meeting later on this afternoon. It gives me time to travel down, gives me time to do a bit of sightseeing, as I always like to do in London, greatest city in the world. But that means I have to get up early. And I've actually beaten the alarm this morning. Lots has been happening in terms of the charts, in terms of opportunities. From my eToro alerts, I know that my pound Japanese yen position was stopped out. I lightened up on that last night at 10 o'clock, so not taking a full 2% loss. And my Australian dollar Japanese yen long, that's right, long position, hit target overnight. So kind of net of net, I've got quite a few positions on at the moment, and there's lots to review. I need to find some time at some point today to jump into the charts and review what's going on. Could be today, could be tomorrow morning, not quite sure as yet, but I will do that. But in the meantime, it's time for a very big coffee this morning before doing the market analysis now, jumping in the car, getting to the station and travelling down to London. So all suited and booted this morning, so let's head to London. So just arrived at East Midlands Parkway station. Probably the strangest station railway station I've ever been to. Built next to a power station. in the middle of nowhere, about 2 miles away from the airport. So there's actually no connection here. You've got to have a car to get here and take a train. Planning is everything, and if they'd have planned it a bit better, they would have built it to the airport, but never mind. So yeah, did the market analysis this morning, and in a number of positions. Feeling a bit stressed this morning, to be honest. Probably in too many positions, too much going on, conscious that I'm away for 2 days and I need to get the blog post out, I need to do the video stuff. And I've got quite a few trades that are still on the charts that have closed. I've still got them on because I need to do the narrative for the video, and it's just making things a little bit messy and a little bit unclear as to what to see, unclear as to seeing things and understanding what's going on. So I'm just going to hold the positions I'm in. I'm going to check in when I can on the 4-hour closes and see where we end up. But yeah, I'm going to put a blog post together. I'll probably get that out tomorrow. It's going to be for 3 days because I'm traveling around. It's difficult to get that out. You can read this at stgforex.tv, and in that I'm going to put the monthly results for month 2. It was drawdown in month 2, not a huge drawdown by any stretch of the imagination. Drawdown's part of the game, but as I'll talk about, the title of this blog post is Don't Count Your Chickens, and there's a big difference between paper profits and booked profits, and things can change at a moment's notice in the currency markets. And certainly over the last few days, any trades that I've had on that have a pound sterling counterpart, either one side of the trade, caused me a load of problems because of the Brexit news. There's a no deal on, there's a no deal off. Yeah, so got a couple of signals this morning on pound dollar bid and pound Japanese yen bid. Just stayed away from it. Stayed away from it for 2 reasons. Too volatile, whipsaw action, and also I've stayed away because I'm slightly above my maximum risk exposure, which I don't like to be, but yeah, I'm in some opportunities and the majority of those are in profit currently. So quick update, I'm gonna have a walk over to the platform, get the train to London, and check into the hotel, and then I'm going to go and do a bit of sightseeing before the meeting at 4 o'clock, pre-meeting at 3:15. So checked into the hotel, room's not ready, so I've got a few hours now to kill before my meeting. So I'm going to go and do some sightseeing. London is a great place for history, and I always like to take the opportunity when I'm here to come and see something different, see something I haven't seen before. So yeah, watch this space. So I've just arrived at the National Maritime Museum in Greenwich. Had a quick walk past the Cuddy Sark, came through Canary Wharf. Man, there's some big buildings there. Lots of buildings going up. It's amazing how they do that. But anyway, I'm here before my meeting later on to have a look at what's in the museum here. I know there's a special gallery dedicated to Horatio Nelson, Admiral Nelson, Lord Admiral Nelson, and continuing a theme of recent weeks, starting with the Trafalgar Cemetery in Gibraltar, HMS Victory, and now here, just continuing a theme. As I read the the book of his life, which is a pretty thick book, which I'm slowly making my way through. So gonna have something to eat, a coffee, and then go and have a look at what's inside. So I had an awesome trip to the National Maritime Museum, and now off to my meeting. Just dropped off at the bank, now walking down to Moorgate. So back from tonight's meeting, long day, pretty tired now. Checked in with the charts briefly, and yeah, not a lot has happened. Market's been pretty static today. As far as I can tell, we get a good night's rest. Going to be up early tomorrow to check the opening positions, do the market analysis, and as you can see, my voice is struggling chairing this meeting tonight. Yeah, so need to get some rest. And yeah, I'll finish up the blog post tomorrow, which you can read at stgforex.tv. Also record some footage of the trades that I'm in, what's been happening, because it's been a busy few days. And yeah, we'll take it from there. But in the meantime, good night. It's time for sleep. Well, good morning. It is Friday morning and a bit of a milestone, day 50 of the challenge, and I don't mind admitting this morning I am tired. The alarm just went off. I jumped out of bed, managed to switch it off. It was very loud. Never sleep particularly well when I'm away in a hotel room, and yeah, tired. I caught myself thinking, oh, let's just not get up this morning. Let's just stay in bed. And then the discipline kicked in, and the pain of not getting up and doing this thing was worse than the pain of getting up. So I got up and about to do the morning market analysis. I'm going to put the news on. I've treated myself and booked breakfast to arrive. So when that arrives, I'll enjoy that. But I've got about 45 minutes to do the market analysis. I am out and about this morning, doing a bit of sightseeing while I'm down here in London again. So I've got a bit of time now to get into the charts, catch up with the blog, record a video with the price action for the week. Or I might do that later actually, just to wrap up the week. And then it's out and about, have a walk across London and go and see something interesting. And I'll talk more about that in a bit. So left the hotel and here this morning in Green Park, just got the tube down here, and I'm off to Buckingham Palace this morning. No, I'm not getting knighted. I'm off to see an exhibition of Leonardo I was going to say DiCaprio, that's not right, Leonardo da Vinci's sketches, notebooks, and a whole host of other stuff. And Leonardo da Vinci is somebody I've always been very interested in, particularly with respect of trading. The two principles that I think he advocated. The first one is curiosity, which you have to have in trading to find your edge, to find highly probable trades, just to develop your own basic plan and system. You have to be curious about the markets, which I am. And then the second element, which is probably possibly more important, is he is reported to have said simplicity is the ultimate sophistication. And I think in trading it's very, very easy to complicate things, to have a whole host of indicators on your chart that actually don't tell you a lot and actually cause confusion. So I try and keep it simple. Use simple moving averages, there you go, that keeps it simple, and a couple of other sort of trend lines and whatnot, but that's about it. So some great principles from, goodness me, 500 or so years ago. Heading to the Palace to pick up the tickets. Green Park is actually very nice. Don't think I've been here for quite a few years. Not sure I'm going to be able to film in there, but if I can I will. If not, I'll check in again later. So here I am at, sorry, I'm filming myself. So here I am at Buckingham Palace. Somebody thought I was taking a photo, so I waved them on. And as always, it's full of tourists. But I've got to go and find where I get my tickets from for this timed entry. So let's see if I can find a policeman and find out where I go. So it's not every day you get to come to Buckingham Palace, but here I am in the gardens, having done the tour of the staterooms. So had a busy morning, did the Leonardo da Vinci exhibition, the Royal Muse, and now just finished the stateroom tour. Absolutely amazing. Unfortunately, couldn't take photos in there, couldn't take any video in there, but if you're ever in London and you've not been, well worth a visit. So starting to rain now. I need to head back, get my train back home shortly. But awesome morning. In terms of the Forex pairs I'm trading, we have non-farm payrolls out in about 15 minutes. I'm going to check in now with my US dollar CAD short to see where I am. Might need to tighten the stop on that to protect myself ahead of the news. My New Zealand dollar Swiss franc short was stopped out this morning. I'd exited 2/3 of that position already, so the loss was marginal. And last time I checked, my New Zealand dollar, Australian dollar versus Japanese yen pairs were doing well. So we'll see where we end up by close of business on Friday. But now I think I'm going to grab a coffee. So non-farm payrolls number in, and reaction by the market has been offers on the US dollar, so it's good for my US dollar CAD trade. We'll see if that's the real move or the fake move. Feels kind of surreal to be walking around the grounds of Buckingham Palace, but pretty good nonetheless. So yes, we'll see how that trade plays out. I'll get my charts up on the train and see where we're at towards the well, as we close for the end of the week. So I'm here at Tutbury Castle today, doing a bit of tourism stuff with the family and kids, and made it back from London okay yesterday, but pretty tired by the time I got home, so didn't get a chance to jump into the charts to do a review of the week. I'll do that today, a little bit later on, get that posted after these clips. Last night was a pretty good finish to the week. All of my positions in profit. Non-farm payrolls seem to favour my positions, so that was all good. Yeah, good finish to the week. What I am conscious about from recent times is that you have a good finish to the week on the Friday, and by the time Monday comes, things get reversed. So I did take off. I took off 50% of my position in New Zealand dollar, Japanese yen a little bit earlier, just to take some profit before the weekend, and I'll show that when I jump into the charts. But for the moment, just enjoying a bit of the countryside, a bit of sightseeing before meeting my parents for dinner. So let's crack on. So a quick summary of trades in the week and where we are to finish out the week. I cancelled my short entry here on US dollar Swiss franc. We missed it and then tracked down, came back up. I entered here instead on a Golden Gate strategy on the close under the 200 simple moving average. Price then came back, closed past the 200 simple moving average. I took off a third to lighten up on my position. It went past the 50. I took off a third to lighten up on my position, and then tested this high here and began to reverse again towards the end of the week. Important lesson here. These are, well, first trade was cancelled. The second trade turned out to be a losing trade. The important lesson here, I think for me, which I'll talk about in the blog post, is stop placement. I placed the stop here. The better placement would have been above this level, and now if this trade tracks down to the bottom of the range, that could potentially be in a winning trade, albeit 1/3 of the position would have remained on. So important lesson there about stop placement. Next, we go to US dollar CAD. This trade working out well. This is a trend sell here. Closed below the 200 simple moving average. I sold on this candle. We tracked down, we came back up, got a YX reversal candle here, and now are 50% of the way to target 1, where I'll take off half of the position. New Zealand dollar, US dollar. This was the trade I was in last week. I got out on this trailing stop exit here. We came all the way down to the bottom of the range, and then well, not range, but bottom of this low, this 3-year low, bounced off this 3-year low, and now tracking upwards. And I have a long position on New Zealand dollar, Japanese yen, which is doing well, which I'll come on to in a moment. But yeah, just reminds me of the importance of not getting greedy, not entering a position right above a significant low, what I call a Sig 1 level low, or Sig level 1 low. That was a mistake, and I talk about that in the blog post that I wrote. Well, I'm currently writing. Actually, I've yet to finish it. Slightly delayed last week, being in London. Let's move on to the cross pairs now. The synthetic pairs. On Euro Pound, my short entered here on a trend strategy. Price came immediately back. This is the volatile news in the UK. Is it Brexit, no deal, or not no deal? Ultimately, we crossed back above, or the exponential moving averages crossed back above the 50
and I took the decision to get out, exited all of my position. Now this trade is heading down towards what would have been my target, but you know, hey ho, it's just part of the game. The second trade that I had on in relation to the pound, again a similar kind of story. Entered here, we came tracked down towards my target. This looked like to be a winning trade, and then price reversed. And this again is the news that it's looking more likely that we won't have a no-deal Brexit. So, lesson I've learned this week is if there's a certain currency with you know, with a lot of news related to it and a lot of surprise news that's not necessarily scheduled, then it's probably a currency to stay away from. Because third position in pound Swiss franc, again similar story. Entered, what do we enter here? Came back down, tagged me out. I'd taken off various stages to lighten up on the position, tagged me out, and then we headed back up towards the what would have been my target. In fact, we would have hit the target if I hadn't lightened up. My stop was below this level, but yeah, 3 trades there which cost me this week, principally linked to volatile movements in the pound. Important lesson: not to trade a currency pair where there's surprise, or not to trade a currency where there's surprise news potentially going to be happening and on a regular basis. Final trade: Swiss franc, Japanese yen. This is a trade I entered here. I did lighten up on this position. We tracked all the way down here, hit the target. I rolled the trailing stop here. The reason I rolled the trailing stop down here, bottom of the daily trend line, and yes, we reversed back up. Now seem to be trading down off the top of the daily trend line. There may be an opportunity for me to get short again. Then into the commodity synthetics. This is my short on euro Australian dollar. Tracked sideways for a little while, having entered here. Now heading towards the target where I'll exit 50% of my position, so that trade is doing well. Australian dollar, Japanese yen. I'm long in this trade. We've hit the target. I entered here. Long in this trade. We hit the target here and now tracking towards the top of the daily trend line. What I'll be doing is trading the stop tightly there in case we get the reversal, as we saw in Swiss francs, Japanese yen. That can sometimes happen off the trend lines, but for the moment this trade is working out very well. And is a profitable trade. Other trades in terms of this pair, this is the New Zealand dollar CAD. Since being stopped out on my trailing stop, this has really gone nowhere. So you know, no opportunity to enter this pair again. And then finally my New Zealand dollar Japanese yen trade. That's the daily chart. New Zealand dollar Japanese yen. If we have a look at this on the 240, another good trade. Entered here, we tracked upwards and got to a level up here, just shy of the 200 simple moving average. I moved my my trailing stop, my target level down a couple of times, just inside the 200 simple moving average. And then on Friday, having learned the lesson from prior week where I had profitable trades which reversed at the start of this week, I took off 50% of my position, slightly inside the 1-to-1 reward to risk ratio, but better to take the profit, roll the stop and see where we end up. So that's pretty much the trades for this week. And then finally, with all trades closed for August, the results are in. This was a losing month. This is the amount I lost on the month. So a 2% loss on opening capital. The drawdown levels, this is high to low, the highest position the account gets to in the month versus the low. Drawdown very, very similar on high to low. Also drawdown on opening capital, very, very similar. Slightly higher than prior month. I took a little bit more risk. Number of trades, pretty much exactly the same. Win ratio down, which is what's cost me. I entered a number of long positions. Prior month I was all the way short, and it's these long positions, all of which were losers, that really cost me this month. So maybe I'm a better short trader than I'm a long trader. Reward to risk 0.43. This needs to be 2, so it came down from prior month, and amount of the potential trade captured 50%, so it's about on level. So not a huge amount of difference from prior month. I'm encouraged by these levels here not being any higher. So managing my risk just means I need to hang around for the right trades and the profitable trades to come along. What I have done here is added in an extra statistic which I calculated for Prime Month as well. So in winning trades, when the trade goes against me, how far on average does it go against me before it turns around and goes for me? On an average, the stop pressure, as I call it, is about 20-25 pips. So it's a good clue if a trade goes against me by 20-25 pips, then I probably should be thinking about getting out. My rules are there to help me to get out, but this is an extra check, so I'm going to monitor this as we move forwards. In eToro, although the eToro account balance and stats tell otherwise, that's because they calculate things on a different basis, includes open trades. It was a reduction as well there. You would expect that to be similar to that, which it is. Not the best month. August is a difficult month. People are away on holiday. There's been lots and lots of news out. So, these numbers don't make a huge amount of sense in isolation. As I build this as we move forward through the 36-month Forex trading challenge, they're going to make a lot more sense.